Well, national property prices have fallen for the second month in a row as higher interest rates and unaffordable prices hit demand for homes, while rental rates are rising at a faster rate than housing values. Housing data from analytics firm CoreLogic said home values across the country fell 0.6% in June, led by declines in Australia's biggest cities, including Sydney. Jo Masters is a chief economist at financial services firm Barrenjoey, and she joins us now live. Jo, thank you for joining us. Is this trend likely to continue?
It's exactly what we're expecting. We've seen the housing market start to cool some months ago, but that softening has accelerated since the Reserve Bank has started increasing interest rates. We think rates are going to continue to rise. We think households are going to continue to face budgetary pressures, and we've got house prices falling over the next year and a half.
There's no doubt it's a very difficult time for many Australians. When will we see some stabilisation in the market, do you think?
So we're not expecting house prices really to stabilise until very late in 2023. We're seeing Sydney and Melbourne weaken before other capital cities, but we do think that interest rates will continue to rise, and that's going to continue to see more people feel cautious about buying, those affordability constraints getting larger. And also we know that vendors often pull back in a falling market. They don't want to sell their home. So that also slows the market.
You know, we talk about house prices falling off the back of higher interest rates and unaffordable prices for homes. What risk does this in particular pose to the economy?
So we talk about it in economics as the wealth effect. And that's basically when house prices go up, we know 2 out of 3 Australians own a home. They feel wealthier. And that means they're more inclined to go out and spend in the economy, particularly on big ticket items like cars. Now, the reverse is also true. When house prices fall, we feel less wealthy, and so we stop spending. Our estimates at Barrenjoey are that about 2/3 of a slowdown in consumption when the economy is slowing comes from that wealth effect. We also know that housing or owning a home is the biggest portion of wealth across all income sectors of the household sector. So it's a broad-based feeling of, I don't feel so wealthy and I slow my spending.
That's an extraordinary figure. If you are looking to buy property, would now be the right time, or are there just so many economic factors that make it too risky?
Look, there's always a myriad of factors in terms of when is the right time to buy a home. And of course, a lot of that comes down to individual circumstance, whether you're an investor, whether you're a first home buyer, how long you expect to be in the market. But look, what we do expect to happen, as I said, we think that interest rates have further to rise quite significantly, and we're expecting a rate hike again next week and the month after. And also house prices are falling. Now, the other point I would make is that as economists, and indeed in your lead story, we talk about the national house prices are falling or rising. But of course, there's no such thing as a national housing market. It's very dependent on particular suburbs or particular types of homes. For example, we're seeing standalone houses fall faster than units. We're seeing capital cities weaken faster than regional areas in Australia. So a lot of moving parts there.
A lot of moving parts. You mentioned the cash rate, the official meeting next week. How high do you think it could go?
We expect the Reserve Bank to raise by another 50 basis points next week. That will take the cash rate from 0.85 today to 1.3% next week. But we then think that they'll follow up with another 50 basis points and a couple more 25 basis points. So we've got the cash rate peaking at 2.6% in early 2023. To put that in context, if you go back to April, the cash rate was 0.15. And we're already seeing fixed rate mortgages substantially higher as well.
A long way to go by the sounds. Jo Masters, thank you very much for joining us this afternoon.
My pleasure.